Let's have a technical look at the markets now. We're joined by Daniel Bruno, who's a chartered market technician at fxboss.info. Daniel, thank you very much for coming in to talk to us.
Thank you and good morning.
Good morning. Let's start with the oil chart. What do you see here? It'll appear there.
Okay, let's have a look.
There it is. Does that look like the chart you intended?
Well, it's a chart. It is a chart of oil. It's not the chart that I sent this morning, but we'll have a look here. The oil is this is a seasonal chart of oil, and between typically what we've seen over the last 24 years is between the months of March and October of every year, there's a strong tendency for prices to move higher. So that's good news for anyone who's long oil on this. We see that with this seasonal chart.
So you see that uptick that we see at the end there continuing?
That's right.
Yeah. Okay, let's move on to gold then. There's been a really interesting story from a fundamental level this morning talking about the IMF selling gold. But we'll bring up a chart and you can see, you can tell us what you see in this one.
Okay. Well, gold has... what we see at the bottom of the chart there are momentum indicators that are positive for the continued rise of gold as long as we stay above $1,000. The 50-day moving average remains above the 200-day moving average, and we have a bullish candle pattern that is also conducive to higher prices. And at the top there, we see the relative strength index is breaking through support, rather resistance. So the preponderance of the indicators are favoring continued rise in gold prices. My projection for gold within 12 months is $1,400, and that is a Fibonacci 150% Fibonacci projection from the recent price rise that we saw from February of 09 through November of 09.
Okay, let's move on then. One more I think we've got time for. Financials. What are you seeing in the banking stocks at the moment?
Well, what we
we've got a chart versus large caps.
What we see with the financials is that the ratio of the financial sector to the index, the S&P index, shows that the financial sector is underperforming. The financials, what we see there on the left, the trending downwards at about a 45-degree angle. We see that the financials are underperforming the broader index, and they continue to be weak, so I would look for continued weakness in banking stocks and other financial services stocks.
Okay, interesting with all the positive results we're getting out from the sector. But interesting view. Daniel, thank you very much for joining us. Daniel Bruno joining us from fxboss.info.
Thank you very much.